Bitcoin has retraced nearly $10,000 in just a few days following a new all-time high. So is it possible we've just seen the cycle peak? It will look at the data to see if this BTC bull market really has topped already. So we'll get right into it on the Bitcoin price live chart we have here on BitcoinMagazinePro.com. Now, as we can see, the price as I film this is around $115,500, up slightly from just a few hours earlier today when we were down in the $114,000 region. But if I just go onto a 1 week chart here, what we can see is as Bitcoin made a new all-time high above $124,000 on August the 14th, we've now retraced again, as I said, to around $10,000 lower than that, to around $115,000, which obviously isn't great to see. No one likes to see that. But if I just go over to the TradingView chart here, what we can see is even though Bitcoin has retraced around $10,000, if I just grab the percentage tool here, again, from the high we see on August the 14th, it's actually a downwards move of only about minus 7.8%, less than 8%. But I think because Bitcoin has now reached these big price levels, well into six-figure territory, over $124,000, these small percentage moves are turning out to be thousands and thousands of dollars. If you look to an 8K retracement just a couple cycles ago, that was half of the entire move we had up pretty much. And we've now just done that in just a few days. It was less than 100 hours. So what I've loaded up here are just 4 moving averages, the 50, which is the yellow one, the 100, which is the green one, I believe, and then the 201 year as well. I kind of got them the wrong way around. But as we can see, Bitcoin is actually quite nicely at a level of potential support as we're now looking to bounce off of this 50 daily moving average. And if not, it's not too far beneath us that we actually have this 100-day moving average coming up to around $110,000 if I just draw a line on there. And that actually coincides nicely with the previous peak that we set over here in May of this year. So hopefully we do have a fair amount of confluence of support and some buy pressure coming in if we are to retrace, even though it's around this $111,000, $112,000 region. But right now, as I said, I don't think things look too bad. It's obviously not a great look to see Bitcoin immediately after making a new all-time high come back down and dump nearly $10,000. But realistically, this is pretty normal throughout a Bitcoin bull market. If I just look to the Bitcoin long-term holders chart we have here, what we can see is looking at the amount of supply held by these long-term holders, or those that have been holding Bitcoin for 155 days or more, is if you just zoom in, this has actually started increasing once again. So what we typically see during Bitcoin bull markets is the amount of Bitcoin held by these long-term holders rapidly decreasing. We've already actually seen it multiple instances in this cycle already, as Bitcoin first breached $74,000 back last year, and as we first entered six-figure territory, we saw millions of Bitcoin being transferred from long-term experienced holders to new market participants. And this is what drives Bitcoin bull markets. We need new capital flowing in. We need new people willing to buy Bitcoin at higher prices than what we're currently at. If we look to the previous cycles, this is pretty much one consistent downtrend that we see throughout the latter stages of the Bitcoin bull cycle, where we've already seen in this cycle 2 different instances of this rapidly decreasing before massively increasing once again. And as I said, we're actually now seeing this increase over the past few days and weeks, indicating that once again, probably 2 different sides of this. Not only are we seeing long-term holders not willing to sell Bitcoin at these prices because they're foreseeing much higher prices in the future, but again, we're not also seeing this new demand coming in. We're not seeing a huge amount of capital inflows into the market. We're almost stagnating it, not willing to sell these long-term holders and not willing to buy new market participants. And we can see that reiterated if we look at something like the Bitcoin ETF inflows. What we can see is over the past few weeks, these have actually been pretty low, pretty minimal. And especially as we had this big retracement just a few weeks ago, we actually had a huge amount of net outflows on the day. But what we can see is what I've done is just take this data using, if you just scroll down here, the CSV data download button. So if you are a Bitcoin Magazine Pro site subscription, you'll actually be able to access the raw data for this metric. Now what I've done is, if you can see this, I might just move myself. In fact, you can see that fine. What I've done is just taken the price, the total flows for any given day, and averaged that out over a 28-day period. Now what is really interesting is as the Bitcoin price is increasing, we're seeing this average ramping to the upside, and they actually usually peak at pretty much the exact same time. So this is probably a metric worth keeping an eye on, rather than just looking at the individual days. If we can actually average this out over pretty much a month, 4 weeks, then we can get the general trend. But we can see as this started increasing, as we were at these local lows around $74,000, $75,000, even while the net flows were still negative, the rate of flows was rapidly diminishing, the rate of outflows, I should say. So once this started increasing to the upside, even before we'd hit positive inflows, this signaled that the market was reversing. The trend was changing to the upside. And now we've actually recently seen over the past few days and weeks, this on a very much downwards trend. So again, this doesn't necessarily mean that we're seeing outflows. It just means that the rate of inflows is diminishing, it's decreasing, it's decelerating, which typically just means less capital is flowing into the market. And again, the market is just supply and demand economics. We need new capital coming in. We need new supply from long-term holders, not technically new supply, but we need supply from long-term holders willing to be sold. So I think we're just at a stagnant point of price action here. I don't think this is anything to be worried about. An 8% retracement is very typical, very normal. In this cycle already, we've seen multiple 30+% retracements. But if we just look at something like the Bitcoin funding rate, again, it gives me some confidence and some confluence that I don't think we're going to see a huge retracement here. I definitely do not think the market has topped out. If I change this to coin-denominated funding rates, and again, this is just on the 1 hour time frame here, we can see over the past few days, there's actually been instances of negative funding rates, which again indicating that a majority of leverage traders are betting on further downside, which typically just doesn't end too well. We can see the instances historically of negative funding rates usually coincides with local bottoms in price action before the price actually rebounds and turns in the opposite direction. So the fact that we've seen multiple days of negative funding rates, coin-denominated funding rates, again gives me some indication that maybe we're not going to have this big drawn out big bear market, or the top isn't already in. Almost no on-chain metrics are pointing towards the top being in. We're just looking at more short-term where we could go. So if we look at the short-term holder realized price as well, this coincides with kind of what we're seeing on the chart with the 50-day moving average, as well as that confluence of support around $110,000, our previous all-time high. All we can see is if we just zoom in, this is matching up. It's currently about $108,500. Soon it's going to be $109,000. And again, that's going to coincide very nicely with price levels that we've seen that coincide with this big area of interest, this big buy pressure area. So I'd be really surprised if we dip to $110,000 and substantially beneath that. Of course, if we have a wick or two beneath that, that's fine. It's probably just going to wipe out some leverage long traders and hopefully grab some liquidity and fuel for the upside till we can hopefully match to new all-time highs in the not too distant future. But again, another thing that's maybe contributing to this is if we look to the global M2 money supply. This is the global liquidity metric that everyone's been watching this cycle. And again, if we just zoom in, over the past few weeks, month or so really, we've seen very stagnant M2 expansion. We're not seeing a huge amount of new fiat being printed. We're not seeing a huge influx of dry powder on the sidelines waiting to go in and rotate into speculative risk on assets. And again, all of these are kind of just pointing towards maybe an upcoming lull, an upcoming chop and consolidationary period for Bitcoin. If I just go back to the TradingView chart here, and what I'll do is I'll just hide these indicators, and then I'll also just remove the drawing. What we need to be potentially prepared for is, given the nature of this cycle so far, given the price action that we've seen, huge expansion in price action, big explosive move before months of chop and consolidation, what we need to do is acknowledge that we might see something similar to that. It would be really boring. It would be truly terrible to see. But if I just grab the previous periods of choppy consolidation that we've seen throughout this cycle already, we need to acknowledge that this is a possibility. Given the fact that we may be seeing lengthening cycles, and I'm not going to say we are seeing lengthening cycles because there's not enough definitive data to support that, but if we are seeing lengthening cycles, then there's a good chance that this cycle might far extend into 2026. So if I grab all these three previous instances of choppy consolidation for the Bitcoin price action, that would put us somewhere around February to March 2026 within a tight range, which, to be honest, I could maybe see being a realistic possibility. The markets like to inflict the most pain on the most market participants. Now, what would be the most painful thing to endure would be another 6 months of Bitcoin just chopping and going sideways and having almost no price movement. If we saw something like this, especially if we had some run-ups to new all-time highs, dips down to 110K, aligning with that area of confluence and support, this would just wipe out a vast majority of leverage traders, finally allow new capital to come into the market, feel like they're getting good value for money. And again, hopefully that would coincide with other macroeconomic factors, hopefully again pointing towards more bullish conditions, not just for Bitcoin, but for markets in general. If we see a Fed pivot and multiple rate cuts, then again, that's going to look good. But ultimately, we do need to acknowledge that Bitcoin is still very much correlated to the S&P 500. And if I just zoom in here, or US equities in general, I shouldn't just single out the S&P 500, but we can see that this has recently had a little bit of a retracement. So it makes sense, as this has matched new all-time highs and had a little bit of a pullback, that Bitcoin is going to have a little bit of a pullback as well. But really, there's just no need to worry. There's nothing that is setting off any alarm bells from our perspective to look at on-chain data, to look at derivative, macroeconomic, technical data to say, yes, this is terrible. We have topped. We are going to see this big bear market. things look fine, things look very healthy. This is normal to see in a Bitcoin bull cycle. Of course, we'd like it to be a little bit more explosive and euphoric, but this way the cycle might actually last a lot longer and be a lot more sustainable for considerably higher prices. Also, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your #1 source for Bitcoin analysis. So just to summarize, Bitcoin has retraced nearly $10,000 in just a few days following a new all-time high, which of course doesn't look great, doesn't feel great. But in percentage terms, this isn't even an 8% retracement, which is really minimal for an asset like Bitcoin, which is very volatile, has these big violent swings to the upside and the downside. And even though, of course, we have grown and matured massively as an asset class, we are still pretty small compared to assets like gold, or especially looking at the stock market. We are only a couple $1 trillion, which I say a couple trillion, but we are still gonna expect volatility. We are still likely going to have a 50-60% bear market, if not even more. We are still going to have these 100% plus, multiple 100% plus bull markets, but an 8% retracement, it's just business as usual. I know the price action is disappointing. Of course, when we set a new all-time high, you want to keep setting new all-time highs every single day, but as I said, these are very common for Bitcoin. And it does feel a lot worse given the fact that we are at $124,000 now, or that's where the new high is. So a $10,000 retracement feels massive. It feels absolutely crazy. But if you look to the 2017 market, $10,000 was half of the entire price of Bitcoin. And now this is just a small little dip that really, if you're just looking at the percentage terms and zoom out, you barely even notice it. And of course, we can see that the lack of demand is somewhat alarming. We'd like to see new all-time highs, and then following that, new capital pouring in, retail FOMO, institutional accumulation, but realistically, we haven't seen that yet. And this is likely stemming from the fact that we have seen a little bit of a lull in global liquidity. And we're pulled back across all markets. Like I said, it's not just Bitcoin suffering. If we look at the S&P 500, if we look at gold, that's been ranging for multiple months now, it makes sense that Bitcoin is going to follow what a vast majority of other markets are doing as well. But if you just zoom out, it's business as usual. No, we haven't topped. I'm 85% sure. Of course, there's a chance that we have. I never like to work in certainties, but my vast, overwhelming majority base case is that we still have considerable upside potential remaining for this cycle. If you like this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. Whether 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And of course, let me know what your thoughts are on the current Bitcoin price action market. Are you bullish on the long term, or do you think that maybe we have topped out? Let me know what you think about casual Tuesdays here on the channel as well. I think this is the first video that I haven't filmed with a cat and uniform on, so I've been getting a lot of comments about it recently, so I thought I'd dress it down for one, change it up a little bit. And as always, I'll see you in the next one.